Welcome everybody to the Historical Analysis free webinar. This is a quick promo for the upcoming Historical Analysis Masterclass that we'll be doing with John, and we'll have more info about that shortly and at the end of today's session. So welcome everybody. It's great to have you guys here. We're going to cover a lot of amazing things, legendary traders, monster stocks, and market cycles. So we're looking forward to this, and it's great to have John, the market historian here himself, to walk us through it, to be our guide here today. So John, thanks so much for doing this, and yeah, really looking forward to it. I'll hand it over to you.
Thanks, Richard. I really appreciate that, and I'm so grateful to be here to do this. I'm very excited about this. I think this is going to be hopefully a great resource for everybody. A couple things up front. I have to apologize again. I'm still not 100% from this virus or whatever I had. The cough is still lingering, so please excuse any coughing and the probably 2 gallons of water I'm going to drink through this things. But and a big thank you to TraderLion. These guys have been great. We've been working on this for quite a while, and they're the master of master classes. So I was honored to be able to do this with them. So, and then one more thing, I do want to say we are dedicating this course to William O'Neill, the boss we had last month, just to honor his incredible work. He is a huge focus in this class as one of the top, actually the top legendary trader in my book. So I just want to get those out front, and let's go. So the motto of the class, if you want to back up one, so study the past so you can profit in the future. That's the theme and the motto of this class. That is so critical. I can't put this enough out there, the importance of this. Every great legendary trader that I studied past historical analysis. And to me, after they mastered fundamentals, the technical analysis, and the psychological side of it, they all did this. And I think that was a key point that I studied in all the studies I've done to take them from here to here. The elite traders of all time all knew historical analysis. And there's 3 main parts to it. There's the cycles of the market itself, the great traders before them, and then the monster stocks are the best stocks of every uptrend. So that's the theme of the course, and you're going to see as we go along how many times that occurs. So, okay. So there's the master himself. I call him the chairman of historical research. Nobody in my book has done more in-depth research on the stock market than William O'Neill did. And this quote from 2004 sums up the importance of this class, because he was so entrenched in the history of the market. So he says here, and this was almost 20 years ago, you can always learn from history because human nature doesn't change, and there's really not as much that's new in the market as most people believe. Coupled handle patterns have appeared and reappeared in every cycle throughout market history. In every market cycle throughout the entire 20th century, big funds and pools went after the best growth stocks at the time, ran them up, eventually pushed Bs to levels no one could justify. It's just history repeating itself over and over again, human nature continually on parade. That is a key. That's the quote of the course. That's what he did that, okay? And he was, in my book, the best ever. The best ever, why do I say that? I mean, there's been great traders in history, but the longevity that he had, 55 plus years active in the market or more, high win-loss ratio of near 66%. The average professional trader is about 50%. Performance out returns of plus 40% annually over decades. And then the ability to land the major leader of every single uptrend. We're going to go through all of those that he did. He did it for every single decade. How did he do it? He studied history and used precedences from that to his current day. So, kudos to him, and that this is in his honor. So let's roll on to the next one. So, all right, here's the worst slide. I'm blaming Richard for this. He forced me to put this in here. I don't like to talk about myself, but he wanted me to give a short bio on myself. So I was a finance major in college. That was a long, long time ago. Heavy concentration on investment courses, and that's when I really got interested in the stock market. After graduation, I became a stockbroker for oldie discount brokers. They're not even around anymore. They were bought out by, I can't remember who it was back in the day, but I was a stockbroker at a discount brokerage house, just learning how to take orders and quoting people and everything else. And then I passed my Series 7 and blue sky laws and then went off to a full service firm and couldn't stand it. I was cold calling, dialing for dollars, and just when you finally got somebody, you had to give the recommendation of the brokerage firm. I hated it. My interest was on the research side. I should have stayed in the industry on the research side, but I did on my own time. I used my college education to go into managerial finance as a controller for several firms. I read hundreds of books on the market while I was still doing that. I've left that industry. I'm full-time now on research and doing the market. Have been for a couple of years, several years now. But I made every single mistake in the market and probably invented some new ones. So don't feel bad and I still make some. Everybody does. You're going to see these legendary traders still after decades. They still can fall to their own failures, but they recognize them quickly and then they turn themselves back around. So I discovered IBD and it was the total opposite of what I was doing, and it turned my results around. So then I researched the best traders that O'Neill had studied before, and I brought this string all the way back to the beginning, which for me, it started with Richard Wyckoff in the late 1800s. And we're going to talk about all this as we go forward. So I kept researching all those books and O'Neill's mentors, and then kept coming back to them. And then I put them all in one concise guide, lessons from the greatest stock traders. And then I just put a little paperback book together. I went out to meet O'Neill, and I had about 1 minute with him before security kicked me out. And McGraw-Hill called me a month later and said, O'Neill wants us to publish your book. So, you know, he was a huge impact on me. He started all of this mess for me. So, and the book did really well. So McGraw-Hill wanted to know you had any other ideas. Then I did the cycles, which is the legendary traders. And then I did the stocks. So the books are a progression. They're the greatest traders, every single market cycle, and then the best stocks in there. And Monster Stocks came out, 15 years ago or something like that. And I've had some requests over the years to update that. So I came out with Monster Stock Lessons last year to look at 2-year cycle there, which had everything. It had a bear market, and then a bull market, and then a choppy uptrend market. So that's, and that this is an interesting story. So how did I get here on Twitter? So the beginning of April 2020, I'm home. Jim Ropel calls me out of the blue, and he says, the market is just fallen off a cliff. And he calls me up and he goes, hey, Mr. History, I have this quote, but I don't know who said it. You know, he tells me what it is. He goes, I think it was Jesse Livermore. And I said, no, that wasn't Livermore. It was some other guy. And so Ropel's like, how come you're not on Twitter? And I'm like, what would I do on Twitter? And he's like, what do you mean, what would you do? You tell people about history in the market. I said, so how many people are going to like that? 10? And he's like, no, many, many, many people. So he said, check it out. And I did. So this is all blamed on Ropel. He did all this. So anyway, but I love doing it. I'm on Twitter and I do post a lot of history passages from great books and everything. So that's enough about me. Let's keep going. So the course outline, we start in 2 weeks. That's when school starts, summer school, sorry, to take your summer out. But so there's 10 webinars. We're going to go through the first one, an intro, and we're going to start to get into the legendary traders. There's 7 legendary traders that I'm going through. Wyckoff, Livermore, Baruch, Gerald Loeb, Jack Dreyfus, Nicholas Darvis, and William O'Neill. This course is really it's the compilation of all of my books, like the best parts from them. It's like the greatest hits of those books. And it uses a lot of other resources and fills in gaps from the time period that I hadn't written anything. So it's everything and then plus more. So, and it's in a summarized format. So then we do Legendary Traders 2, and then we do Modern Legendary Traders. We're looking at several of those. Mark Minervini and Jim Ropel are some of them. And then we do the commonalities of all the great traders. And then we look at monster stock templates. How did they all look similar? What were the patterns that they followed? And we do new highs and new lows. I'm a big advocate of that. We're going to get into that in a minute. I'll just show you a piece of that. And then the next ones, we go through every single market cycle and some of the monster stocks from every single year starting in 1900. So that, in parentheses, that means for the 1940s, 10 UT, that means 10 uptrends, 8 downtrends, and 11 monster stocks that we're going to analyze. In the monster stocks, we analyze in detail. The uptrends and the downtrends, I'm going to give you a short summary of what caused it or how it came about, and then the leading stocks that led those uptrends, even though we won't analyze every single one of those. And we're going to go through every single one, then the 50s, 60s, 70s, all the way through, and then to today. And let me jump back for a second. After every webinar, as we go through the course, especially in the early part where we're talking a lot about history, we're going to take the last 10 or 15 minutes of each of those webinars and relate it to the current day, no matter what day it is. So that we're going to bring back, like, what would they do if they were in here today? What stocks would look like what they had back then? Because it always repeats itself and keeps going through that. So, and then the last course, we put it all together. We talk about current conditions in more detail. We summarize everything, all the lessons learned, and there's a bunch of extras in there too. So that's one very interesting thing. We're going to have several guest speakers join us. We're going to keep those names a surprise until they show up, and it's going to be very interesting. So several of those webinars we're going to have guest speakers throughout. I think you'll find that very interesting. So, okay, next.
Yeah, just before that, I'll add that the dates for this will be starting July 8th, and then we'll be going to August 16th. So just to put some time frame to it. And with that, here we go. Let's dive in.
So for each of the legendary trades, we're going to show you pieces of what is in the course. So for every legendary traders, we go through a background of each one. I think for O'Neill, there were like 20 points. So this is like 4 of them, and each trader has those. So, and you're going to see through their background. If you don't know who these traders are, especially, I think most everybody should know who O'Neill is, but if you don't know much about Dreyfus and Gerald Loeb and Bernard Baruch and Jesse Livermore, you're going to see this string of history of how they all learn from each other. So it's very critical, I think, that you understand who these people are. We're going to do it in summary form, so I won't bore you to death with them. Here we have O'Neill, a couple of things on O'Neill's background. So in 1962, he was reading Reminiscences of a Stock Operator. He started in the market in 58. So he's pretty much a rookie still, 4 years in. And he saw how the parallels of market history from 1907, when Livermore was in that book, the market was topping, Livermore started shorting stocks. So Livermore in 62 was reading that at the time and said, this market looks exactly like what he's describing here. So what did O'Neill do? He turned around, he shorted three stocks at that time on the 62 break and made substantial profits on it. So then he spent several years putting his system together, the Canceling method, which again, he always said, this is not my system, this is history's system, repeating itself of what everything did to make it successful. So his big mentors became Richard Wyckoff, Jesse Livermore, Jack Dreyfus, and Gerald Loeb. And he learned different pieces of the same type of strategic strategies from each one of those and put them into his system. And then tweak them. You're going to see every trader as we go along, they kept the same strategies in place: great risk management control, extreme discipline, how to buy, how to sell. They were all very similar. And they made tweaks to their own system to fit their own personalities. So here's another one. Success in 62 and 63 when he took his account from 5K to 200K, just under 4,000% in a year. Not a bad return there. So he became the youngest ever at that point at age 30 to buy a seat on the New York Stock Exchange. Then he struck out on his own, created his own companies. And so the backgrounds give you a history of them. So let's move on. So there's a background on each one. Then we do a section on failures because you actually, every trader will tell you this. You learn more from your failures than you from your successes. So study the mistakes you made. So Jesse Livermore, there's a book on him that's calls him the greatest stock trader ever. I don't know if I would say this about Livermore. I think he was probably the greatest boom trader ever, but he was also a huge bust trader. So he rode the roller coaster from way high up to way down, and even later in his career. So, but there's still tons to learn. I would say Wyckoff and Livermore and Baruch were the pioneers for everything that came after them, because they were the ones in the market in the late 1890s, early 1900s. So Livermore made some good money on Northern Pacific. That was his first great stock that he made a gain on, but then he lost it. He lost his gain in that stock because he was shorting two other stocks during a strong market uptrend. So he's going against the grain of the market, which then turned him around. He learned from that failure. Following the fortune he made in 07, because he shorted the 07 bear market, he became involved in the cotton market and took a tip from an expert and lost all his prior profits. He didn't cut his loss short on that one, and he was taking tips and not doing his own research. Traded in desperation to get back all those losses, but lost even more. In 1913 and 1914, the market was very flat and choppy. And Livermore was what I call revenge trading, trying to get his money back in a very choppy market. And he lost even more, and he was in debt over $1 million. So anybody get chopped up in a choppy market before? I mean, we all have, and we've seen some recent ones too. So his failure from that kept him out of choppy markets in the future. So, and he had some personal issues. So getting your head right and making sure you're always in tune with the market is very important. So there's a section on failures for every trader. So I'm just giving you some examples here. So next, we do a whole section on successes. So here's Gerald Loeb. He is a top trader in my book. I don't know why people don't talk as much about him, but he was one of the best ever, a huge influence on William O'Neill and the biggest influence on Nicholas Darvas as well. So he was active from the 20s through the 70s, so over 50 years. And he started with a 13K inheritance, quickly doubled it, and then he lost it all. He took a tip from somebody else. So same thing that Livermore did. But he came back after that one, and then he doubled it again. His mother gave him another inheritance. So you can see I mentioned that in the failures too. You can see how he learned his lesson and came back. He saw the top of the 1929 market that occurred in early September 29. Was out of the market a full 3 weeks before the big break in late October. He was actually on a 6-week European vacation when the market broke wide open in late October and wasn't even in it. He cashed out already, was not affected by it at all. He made over $2 million alone in Montgomery Ward in the late 20s. There's a whole excerpt on that trade. It's in the course. He was profitable every year during the worst bear market in history from the long side. Late 29, 1930, 31, and 32, he tightened up his time frames during short bear market rallies. He knew the environment he was in because he studied prior market periods, and the market wasn't taking off and leading a new uptrend, but he was active in those short-term rallies. This reminds me, Mark Minervini won the investing contest in 2021, up 330%. In a choppy uptrend, what did he do? He shortened up his time frames because breakouts weren't taking off. So, but he knew that, he jumped in and he would turn his account over and over again. Very similar to what Loeb was doing here. He bought GM and Chrysler in 1933 during an uptrend. He traded Chrysler many, many times. When it would come up and it would pull back or correct, he'd be out of it. then it would, Chrysler was a big leader in many decades. Kind of like you're going to see later on, Jim Ropel and O'Neill did that with Apple and Google too. So you ride their uptrends. When they broke, you get out, watch them again, they'd rebase, they'd come back in. So there's success, there's a lot, and this is just a portion of his successes. There's in the course document, I list them all. So next.
John, can I jump in with a question before we move on? So these pioneers, these original pioneers, how would they do their charting? How would they watch price action? And really, they would read the tape. Is that kind of right?
Look at that picture low. Look to the right of him. That's a tape reader. Can you imagine stringing that along and watching the tape? That he was a tape reader. Richard Wyckoff was a tape reader. Now Wyckoff was active earlier than Loeb. So you're getting these things off a ticker machine. I mean, can you imagine what we have today versus what they had back then? But they adopted to it, whatever was out there. Jack Dreyfus, I don't have much in here on him in this promo, but he's in the course. Jack Dreyfus started in the 30s, and when he was in his early 20s, he got a job and he worked for a chartist. And the chartist had Dreyfus manually create charts every day. Plot where it closed, plot where it opened, show me the volume. And it would create the chart day to day. He did that by hand. Dreyfus was extremely successful. He was one of the top legendary traders. In 2004 and 5, when he was later in life, he was in his 90s. He was still active in the market. He hired somebody to do his charts by hand. This was just 15 years ago, okay, with all the technology we had. So, but that's what he was used to. So they all did different things. Nicholas Darvas didn't even live in the States most of the time. He was here a lot, but he lived in Paris, and he used a week-old edition of Barron's and went through the stock tables. We're going to see a picture of that. It's one of my favorite shots. So they stayed attuned to what the market was doing, but I think we have such advantages today with all the technology. I can't imagine reading that ticker tape machine all day, but they did it, and they produced incredible performance results. So. I think you know Jim Ropel, hopefully, one of the top modern day legendary traders. He's in the course, of course, and here's some of his successes. After lots of failures, all these traders had years of failures before they turned themselves around. And all the failures were similar to each other, and then all the successes were too. So hopefully this course can speed up. If you're new or early on in trading, hopefully this can turn you around and shorten up your learning curve. But so in early March 2000, the market, many stocks were racing in the climax runs. Ropel was very active. He sold out of Broadcom. He made over $1 million on that one stock. He had a big position in it and all his holdings. He went from a 200% full margin to a 100% cash position in one day. He saw the top coming. Why? Because he saw prior topping action from prior market cycles. He has a 100-year chart of the market in his office. So he constantly refers back to history to help. He's doing it now. He's like, what does this market look like now that we're in? So we can get to that later, but stayed mostly out of the 0102 bear market, would come in when there were some rallies, would take some short losses and get out, and then stay out if he had to. But when the market turned up in March 03, he landed many leading stocks. He was in eResearch, SanDisk, GenPro, JetBlue. There's about 10 of them we're going to show you here in a minute. They broke out just like prior big stocks from prior uptrends. He knew what to look for. He bought them coming out of bases on volume. He wrote them up into climax runs or breaks of the key moving averages and produced, he was at a triple digit year for 2003. He did great in 05 and 06 with Google and Apple. I mentioned that a little bit earlier. Buying breakouts, selling into strength. If it weakens, he's out, comes back in. These aren't day traders. these, and a lot of them aren't even swing traders. Some of them are, but these are, I would call, intermediate trend followers or momentum traders for whatever the strong uptrend in the market is giving you, or growth stock trade, whatever you want to call it. There's several names for it, but when you latch onto the leaders and you're in a strong uptrend, that's what they did. That's how they all made their big successes. So next. So here's Mark Minervini. I'm sure everybody knows of him. Incredibly outperforming top legendary traders, been in the market now like 30, 40 years, I think. So here's a great graph he showed. 1995 was one of his biggest years. But 94, I was on IBD the other day and I gave this example. They asked me, what does this market remind you of if you go back to history? The 94-95 market has a lot of similarities to it. Because in 94, the Fed started aggressively raising interest rates. They started in February 94, and they raised rates 7 times in a row until January 95. And the market, you see here, Minervini says he went to 100% cash position here. Just before that, the market, this is the Dow. The NASDAQ was way worse than this. The NASDAQ had come down back in November of 93. And O'Neill at his firm sold all his holdings and told his institutional clients, the market's under tremendous distribution, take your profits. And you can see how choppy that whole 94 period is through here. Those big breaks were when the Fed was in there just pounding the brakes on interest rates, just very tight monetary policy. But what happened was, and oh, by the way, in December of 94, Orange County, California took a $1.6 billion loss in their derivatives portfolio because they didn't manage the increase in rates properly. Sound familiar? We had Silicon Valley Bank, we had Signature Bank do the same thing. There may be a couple more out there, we don't know, but the same thing happened in 94. The market did not implode at this time, but it was a choppy downtrend. The NASDAQ was down, I think, 10 to 15%. It just had a rough time with the Fed in there. But in January 95, the Fed stops raising interest rates. Inflation's coming down. That's why they were raising them, because inflation was getting out of hand. And the market in February and March 95 starts to turn up. And look at that run up from here. So what does Minervini do? He's watching this and he takes 2 positions in FSI International and Kenneth Cole in February and March. They both went up over 100% in 7 and 8 months. But what he did was, he says here, picking lows is unnecessary. Trading when breakouts are working is when you make big gains with low risk. He didn't re-enter until April of 95. Look how the market had already run up. So if this current market we're in, if you think you've missed everything and this uptrend continues, here's a great example for you from a master trader, how he did it. He was in some stocks already that were big winners, but he says up here on the top, 95 was one of his biggest years. He didn't get aggressive until April and scored a 413% return for the year. So he's in the course as well. So next. Okay, so for each, hang on one second. So for each trader, of course, we go through their strategies. How did they learn from the failures? They learn what caused their successes. And here's just a sample of Bernard Baruch, who was one of my favorite traders ever, just huge success story. Strict loss cutting policy in place. Sell into strength. Never try to find the exact top. Learn as much as you can about the companies and stocks you invest in. Do a hard self-examination, post-analysis of each of your major undertakings, especially the ones that didn't work. Learn from your failures again. He was one of the first traders to notice the forecasting ability of the market, to turn down before a recession began and turn up before it officially ended. Don't over-diversify, better to own only a few stocks that can be watched closely. Always keep a cash reserve, never be in the market, and be flexible to changing conditions. All of those strategies, all of these traders after him, did the same thing. They had these strategies that he did. So, and every trader in the course has a whole list of those. So, so here's, and then I show the monster stock. Monster stock I define as a stock that doubles within 12 to 16 months, typical. So here's Darvis and a list of some of the big winners he had. I love this picture. There's nothing like a cold one and stock tables to go through, right? So some of his big ones, Lorillard, E.L. Bruce, Universal Controls, and then some other ones that maybe people don't know much about, Houston Oil, National Semiconductor, and Tandy, because those were big winners for him in 1975. So Darvis was not just successful in the period that he put in the book, How I Made $2 Million in the Market. He wrote another great book in 1977 called You Can Still Make It in the Market. I post a lot of that on Twitter. It's a phenomenal book because in the 73, 74 bear market, he kept coming in a little bit, kind of like Ropel did in 2001 and 2, and he kept getting kicked out. So he's like, well, this isn't worth it for me anymore. So he eventually stayed out of that whole the end of that bear market. Oh, but when 1975 came around, the market started a pretty good uptrend. He stayed on the side, kind of like Minervini did, like we just were looking at 1995. He let some stocks prove themselves first. Then he comes into Houston Oil. That's in the course. It's a great chart how he did that. National Semiconductor and Tandy, and he rode those up and scored triple-digit gains on all of those, doing the same box theory that gave him all those great performance numbers in the late 50s. So he never changed his strategy. It was the same one you see from all these great traders. But what he was patient and disciplined to stick with it. So Nicholas Darvis, great trader to study. So next.
I think he's got some of the greatest photos too. If you look up his name, I love all the photos of him studying the charts, and there's some really great ones out there. And his books, as you mentioned, are fantastic.
They're great. So
yeah.
Here's one that he landed in 57, 58. Vehicle Chemical. We were in a space race with Russia at this time, and this was rocket motors and fuel and all that kind of stuff. And you could see that first green circle on the left, the one below the top one, you could see how that stock reacted with that bear market. The 57 was a pretty strong bear market. And I want to throw this in too. Jack Dreyfus was very active in the 50s. He's managing the Dreyfus funds. He stepped aside. As a mutual fund manager, he went to 75% cash position during the 57 bear market. The only reason he did that, because he saw the same topping action from 1937, 20 years later, and that allowed him to stay out of that bear market. And then, Darvis was not active in that bear market either. But when that market starts to turn up in 58 and 58, 59, he gets in here, but he got in later. Right back past that buy point where I say Darvis buys this one in mid 58 and soon after did a large pyramid buy. He holds this winner until mid 59 and scores a massive profit on it. You can see where he sells up there. Now, most people would say, I think he sold a little bit higher than that arrow shows, but Darvis would never sell into strength much. He would keep a stop loss order behind him. So he would mostly sell on declines. But Theocal, he took a profit on the way up because the stock exchange at the time stopped accepting stop loss orders on this stock. He said, well, if you're taking away my risk management strategy, then I'm out of this thing. And he made a huge profit on it. So, and Richard, if you want to read some of that, yeah, right there, because this is an O'Neill chart for the course. I'll just say this right now. If you sign up for the course, we're buying everybody how to make money in stocks, the e-Kindle book, which has all these charts in them. And I use a lot of these. IBD and William O'Neill and Company were very generous to give me permission to use these for this course. But you're going to get that, so you can tag along on the course if you want and see all the other stocks in that book if you don't have it already. Most people should have it. But
Yeah.
these are notes from O'Neill. So Richard, if you want to read that one.
Yeah, so this one here, note 3, which is talking about the bottom of this space right here before buy C. 3 weeks tight, closes along the bottom of pattern. You saw that at bottom of Tennessee Coal and Iron's Cup in October 1898. So going back all the way to 1898 on page 11. At the bottom of SS Kresge's Cup in June 1922, page 15. The bottom of DuPont's first cup with handle base in March 1925. And Chenley's Distilling Cup in August 1945. Maybe you should learn to recognize this accumulation in the future if you want to win, he puts in parentheses.
There's the master. He just lists all these examples from prior periods that go way back too. So he created the model books of the best winners of all time, and then he always would refer back and use that in his day, the current day he was in, and he did that over and over again for decades. So it's I love that passage right there. So and there he is, the master. So here's some of his biggest winners. This is not all inclusive by any stretch, but you could see I put the decades in here too. Every single decade he lands a massive winner. Syntex, Chrysler in the 60s, Pick and Save in the 70s. Pick and Save, that's in the course. He made 285 buys on that. Talk about pyramiding up over 7 years. Made a killing on that stock. Dome Petroleum, Containers, Price Company, Amgen, AOL, all the ones in the 90s he was in. eBay was a big winner for him. Google, Apple. I mean, it goes on and on. There was nobody in my mind who landed the major leader of every uptrend. I'm going to sound like a broken record, but that's just an impressive thing. So if you go to the next one, I think we show you Charles Schwab here. This is one he landed. I have this marked up with all these, what the stock was doing and how it was relating to its 21-day moving average and the volume, price and volume action on this. And then they put in here, O'Neill buys this leader on the breakout in October 98, a big volume. He rides the stock up because it never gave him a sell signal. So some of his big sell signals were breaking support at a 50-day moving average. This one didn't even, I don't even think it broke the 21-day. The market is ripping and in a great uptrend, and he rides this thing all the way up, and then he sells it right into the climax top. That is extremely difficult because at that time, everybody's excited, everybody's making money, people are quitting their jobs. I mean, everybody's making a ton of money, and O'Neill sees that. How did he know that? Because he saw all those climax top runs in prior periods. And the best traders of all time sell into climax runs. The rookies are buying into it. And that's the difference. Jim Ropel is a master at selling into climax runs. And O'Neill was the best ever. So he's the one that defined it. So there's just, and this is, here's something I thought was pretty cool. This is from Monster Stocks. And in Monster Stocks, I don't know how I got these, but these are the color graphs when I was putting that book together. And McGraw-Hill put black and white in the book. So in the course, you get a ton of these color graphs. I think that's kind of, they're just easier on the eyes and better to see it. So every trader, I do a section on their quotes. Their great quotes are just, a quote by a great trader, you can learn so much for. It's almost a course in and of itself. And Richard Wyckoff, to me, again, was really a pioneer on all of this stuff. I'm not going to read all, but I'm going to read this top one because this is my favorite, one of my favorite quotes from him. The market always tells you what to do. It tells you get in, get out, move your stop, close out, stay neutral, wait for a better chance. All these things the market is continually impressing upon you, and you must get into the frame of mind where you are in reality taking your orders from the action of the market itself, from the tape. That was written over 100 years ago. And it's so, I hope everybody watched the Stan Weinstein conference 2 weeks ago with TraderLion. What's Stan's motto, Richard? What does he always say?
The tape tells all. Yeah.
The tape tells all. And he's been in the market over 50 years, and he's one of the top traders out there today. It's the same. His message is the same as Wyckoff's from over 100 years ago. So, and then this second one too. I love this. I have yet to find a man in or out of Wall Street who is able to make money in markets continuously or uninterruptedly. Like anyone else, I have good and bad periods. Everybody still goes through slumps. The best hitters in baseball go through slumps. The best athletes all do it. The best traders do it. Even the legendary traders did it. Don't think they're perfect. They're not by any stretch. But what they do when they make mistakes or they're in a slump, they pull back, quit for a while, then they reevaluate what they did wrong, and they become more patient. But they're always disciplined to learn from it. And all the failures, again, if you take the course, you'll see they're all the same. So, all right, so next. Then there's a section from each one on the lessons they learned from history. So I already did that first one there. But this is interesting. O'Neill in early 82, which is a similar situation to what we look like what we're having now, because there was a lot of high inflation. The Fed was kicking up interest rates and all that other kind of stuff. But in early 82, O'Neill put a full page ad placement in the Wall Street Journal. IBD wasn't created by then. And he used prior market cycle precedences that look similar to that time. A few months later after that, the market started a huge uptrend. The NASDAQ in August of 82 went up 101% in 11 months. So it doubled in less than a year, the whole index. And he said that, he pointed that out. He said in his ad in 82, he said, inflation's back is broken. It's time to get ready for the next strong uptrend. That's exactly what happened. But he used in the ad, he said, the times that looked similar were 1974, 1949, and 1932. He went back and said, these all look similar. So again, using history. He avoided the worst single day in market history in October 87 when the Dow crashed, 21% in one day? Because the market topped in August of that year, and he sold and went to 100% cash position months before that happened. Because it reminded him of the market tops in 1907 that he read about from Livermore, and the one in 62 that he was successful at because he read about the one in 1907. Just some history that they learned from history. So the next one is Bernard Baruch and some lessons he learned. The 1924 market upturn off the bottom looked very much like the one in 1897. He remembered that profitable time and used that as knowledge and experience to reap new returns. He saw the same parallel of that in 1904 to that same market in 1897. Therefore, he used his first success in 1897 to profit 2 more times in market cycles that repeated the same pattern. He also was active in the market in 1961 at age 91, prior to the break in that market, because he warned about it at that time, that it looked like similar market tops. So there's tons of examples of this, how these master traders studied history, remembered it, and used it in their current day. So then the course goes into what I call monster stock templates. I call them MVPs. MVPs are the best of anything. They're typically the stocks that turn into monster stocks and have great runs. MVP means moving average volume and price. So this is Apple in 05 and in 04 and 05. Ropel and O'Neill were both in this stock. Every time it broke out, or every time they were pyramided up, and then when it broke there on that one, they're already gone. So you could see what you do here is you train your eye to be a chart eye, so you can see these things quickly. You're looking at price, you're looking down at volume. The blue bars, Ropel calls those skyscrapers of blue. When you see that and you see these basing patterns, and then it comes up off those, a lot of times the moving average lines or around them. They don't bounce perfectly, but a lot of them hang around there like that flat base in the middle of that chart. And then it comes up again, a big volume, runs up. Those are big traders moving into that stock. They're sitting and holding or pyramiding up. And that's the motto of this course. The greatest traders, the chart readers, after the tape readers, learn to recognize all those patterns. I saw an interview with David Ryan a few months back, and somebody asked him, if you could only pick two things, what would they be? He goes, that's easy, price and volume. Everything is reflected in price, and volume tells you what it's doing. So that's, just keep in mind that stock for 1 sec as we move to the next chart. So this is in O'Neill's book. This is the first chart he put in there. This is from 1885. And he circles down here. He says, this is America's first couplet handle pattern. He created the first stock database in the early 60s, where he combined fundamentals and technicals and then put them on charts and then dropped moving averages in there too. This chart is very similar as you get to that first green circle up above where it says buy. What does it do? Creates a base. Look at the volume down there in the green circles on the volume side. Rips higher on higher volume. Hangs around, just maybe a flat base over here. It's hugging that moving average line. Pulls back a little. When it pulls back and trades flat like that, look how the volume just dried up. This is 1885. Nothing's changed. Then you have a rip here on the biggest volume ever, that second green arrow, circle down on the volume, rips higher, rides that up, pulls back again, rebases, takes up. The same thing we just saw in Apple, 120 years later or something. So, and you're going to see them all, they're all in the course like that. So this is, and I put in here, I said, this is classic positive price and volume action that will be present in all future monster stocks. They all did this, all of them. That doesn't matter what time frame it is. So next, new highs, new lows. I pound the table on this. I did not invent this by any stretch. This goes way back. There's a chart here from 1942 from Gilbert Haller's book. He really was a big advocate of this. The first blue circle up top is the Dow Jones. This is 42, where you had a big bear market at the beginning, and then you had this nice strong start uptrend in the middle of the year, and it races up higher in 43. If you take your eye down to the bottom where the new highs and new low chart is, now those are weekly new highs and new lows. They weren't really calculating 52-week new highs and new lows back then. You could see how this actually leads a little bit, but it correlates directly. And when the first part of 43, the market is really ripping. Look at how high those new highs over new lows gets. And then the market is still, then it starts to go sideways and you see it go negative. That was a telltale sign of what was happening with that 43 market. There's a bunch of charts like that in the course. I do a lot from his book. It's a great book. The next one is from Stan Weinstein's great book. And he did a whole, 14 years tracking the new high, new low differential to the Dow. And you could see, just if you train your eye to it, when the market's down, this is all, I drew a blue line where that break-even point is on the new high, new low. And you could see when it crosses under, and then it pulls up, and it's a gauge. This is how I look at this stat. I put it on Twitter a lot. And the best traders use this. Gerald Loeb used this all the time. Stan Weinstein uses it. Alexander Elder wrote some great books on trading for a living, etc. He wrote a whole ebook on this called the New High, New Low Index. It's tracking right now. We're going to see that on the next slide. But what is it? I don't even consider this a secondary indicator. I consider this a gauge of how healthy or unhealthy an upturn or a downturn is. I kind of think of it this way. Think of it as the speedometer in your car, okay? So you're in an uptrend, and in your car, you're going forward, you know that. But how fast are you going? How slow are you going? Are you going, this gives you a guide or a gauge to how the market is really healthy or it's getting into trouble. And those charts show all that. So if you flip to the next one, we'll go a little to the modern day now here. I track this all the time. The NASDAQ on the left is from 18 to 20, and I put in there 87% of the weeks from January 19th through February 20 had new highs exceeding new lows. 87% of the weeks. That's a lot. Then you have the COVID bear market right there. You didn't have one single day of new highs exceeding new lows for 5 or 6 weeks during that bear market. And the new lows were exceeding new highs by sometimes 3,000 or more a day. That was, look at the rip down off of that. And then in April of 2020, we come out of the COVID bear market, and I put here 92% of the weeks from April 20th through mid-November 21, the peak of this, the start of the new bear that we had been in, 92% of the weeks were positive. Look at that uptrend. That's where a lot of people made big money in 2020 during that uptrend. Then you peak, and then in November 21. So I have from November 21 through April of 23, during that bear market, 72% of the weeks had new lows exceeding. You flip the whole scene over. So it's so reliable, and it goes back. We have data back from 80 years ago. So it's, and the top traders used it all the time. So, and Jim Ropel uses it, Nat Caruso uses it. There's a lot of traders today that look at this. And then the one on the right, I put in here from mid-May 20 to early September, there was not one single trading day where new lows exceeded new highs. 78 days in a row were positive. I had a good year in 2020, and a lot of traders did. A lot of traders made triple-digit gains. It was all right in that time frame. So, and saw that, and it was like, this market is ripping, and stocks are coming out, and there were a lot of leaders. The market was telling you that. The new highs and new lows was supporting that whole thing all the way. You could see after that green circle I have down there, that's when that string was, how it dipped below and you go negative, and then you're negative again in the market, then it picks up again, and it's just a good gauge. So, there's a lot more to that in the class. So, so next, what do we got? Then we get into all the market cycles from 1900. Don't worry, I go through them quick. I'm not going to bore you with you, but these old charts are so helpful. The first thing you should see right off the bat is, oh, in this 10-year cycle, there were 3 major uptrends. Yeah, 3 really strong uptrends, and every single one of them came off of a bear market. And that's the average. In Monster Stocks, I did this study from 1900 to 2005. There were 34 strong uptrends of at least 35% gains over a course of at least 3 to 4 months. And the average was 14 months long, and it gained 74%. And it turns out that the number of those uptrends was 33% of the time. So here you go. You had 3 during this 10-year period. In the course, there's a decade chart for every single decade going back to this one. It shows you, look at the volume ripping on this. Those traders back in the day, this was Wyckoff and Livermore and Baruch. They killed it on all these uptrends. And Baruch and Livermore were also short traders, and they killed it on the downside. So they just did it. And so flip to the next one, you know. Then there's these yearly charts, so you can see when the change began. So this is 1900. This is the beginning of a 48% 9-month uptrend. Over on the right, that copper stock was a huge winner in that run. Bernard Baruch was all over that. When he saw it topping here, he turned around and shorted it and made another huge killing. So then next, for each one of these time frames in these uptrends, I do a short summary. Just a summary of how strong it was and really kind of what caused it. So this one, official recession ended, the market came up from prior correction. Wyckoff saw leading railroad stocks starting to top in early May 01 when that run was over, and he went to a full cash position just before that market broke. He saw those from prior periods. He knew what they looked like. And then for each one of these uptrends, I list the leading stocks. I already mentioned the one Baruch. So Northern Pacific in 1901, that was Jesse Livermore's first major winning stock. The course has a whole detailed chart on how he did that. It's just, this is how we do it. So next, here's another one just to show you. This is the 60s, and I have over here. So you had, now O'Neill's just starting out, right? A couple of years earlier. So it says a nice uptrend in early 61 that O'Neill did well with, but then he gave back all his profits when they topped. He had no sell rules yet. So that made him go back to history and determine, how did Dreyfus get out of his stocks? Because Dreyfus was a huge influence on O'Neill early on in his career. Okay, I saw how he bought them, and that's what I was doing, but I didn't have any sell rules. How did he sell them? Well, breaks of key moving averages, extensions too far above a certain level, et cetera, and watching what the market was doing. In 62, you had that sharp bear market there. Then you had a long 30-month uptrend, a rising volume. Look at the volume going up. And then in 66, you had another sharp downtrend. So if you go to the next slide, we talk about, I do the same thing in the downtrends, because you have to know both sides, right? So the summer of 61, stocks started to stall, and then the market comes down. Kennedy, they had price controls in steel industry, unemployment was high, you had the Cuban Missile Crisis. There's always going to be something out there, always issues going on. You're never going to have a perfect scenario. But if you watch the market and what it does and what the best stocks do, you can't get too far off. So Darvis at that time was forced out of all his positions. He had stop losses in place. And in the early spring of that year, O'Neill in 62 was in cash. That's when he read Reminiscence and saw the 1907. He shorted Certainty, Elside, and Corvette and made big profits on those. The 66 market, 3 strong years. You had the market topping, inflation and interest rates were rising. Sound familiar? You had a war issue going on starting then. And what happened there? O'Neill and Loeb saw the early signs and were in cash in the spring. They all stepped aside. They missed that whole 8-month. It was a pretty good downtrend. So they saw the early signs. How did they know that? From prior periods they were in. So same thing, just history repeats itself. So next.
Just jumping in, that 62 bear market, that's when I believe Stan Weinstein, that was the first one he experienced, and that forced him to kind of go back to the drawing board, study more, and eventually build out the stage analysis system. So it's interesting, both O'Neill and Stan were doing that at the exact same time. So super cool.
That's interesting because, both their books came out in 1988. So they both had great books come out, and they both were in here at the same time, learning this, seeing the same thing, learning the same mistakes, and then figuring out what did I do wrong. So
exactly.
This is another, just one of those, in that 30-month uptrend in the mid-60s, Rollins, there were a lot of stocks breaking out, but this was a good one to study. Excellent positive moving average support. Volume was coming in, price action ripping higher. And Richard, if you want to read that box that O'Neill put in there.
Yeah, happy to. So he says, and we're looking at right over here, Rollins became a perfect precedent for Simmons Precision next year in November 1965 when it broke out of another 3-week high-tight flag and advanced 5 times in the next 22 weeks. Of course, you had to use charts to see the comparisons.
See, there he is again, the master doing it. Actually, E.L. Bruce was a high-tight flag in the late 50s that Darvis made a ton on. And Taser was a great one in 04, 05. Same patterns. It looked exactly the same. So, and those Taser and E.L. Bruce, they're all in the course. So you can see them if you take it. So next is, so jumping ahead a little bit, these are just samples. So the 02, 03 market, look at that. There's 02. You had 4 legs down at 02 alone in that major bear market. That doesn't even count 2001 and the end of 2000. So, but then you had the market bottoms. I put that in blue. The market bottoms in October of 02. but then it chops along. We're going to see a little bit more of this in a second. And then it confirms an uptrend in March 03. And there's Taser way back, what was that, like November or something, way over to the right. So you could still get in on these things after an uptrend is rolling along, but a lot of the biggest leaders come out first. And O'Neill saw eBay in October of 02, took positions in that, never violated a sell rule. He really jumped in 03 when it took off. So if you want to go to the next one, I think we see that. This so in the course, there's some of these charts that come from a master class that O'Neill put on. And O'Neill and Company was very kind to let me use a bunch of these in the course. So here's just a sampling. The key here is, so October 02, the bottom of this market is off to the left. You can't even see it on this chart because it only goes back to, what, December? But the key here is, look how choppy that got even after it never pulled back and created a new bottom. But if you train your eye on price and volume, and IBD pointed this out, in January and February, if you look at the volume bars in there, especially in February, there wasn't one red bar that was above the average. The black bars were higher. They said accumulation is happening even on this downtrend here. And that was a big fluke. Then you had that shakeout there in, what was that? March?
March, yeah.
Yeah. And then that shakeout there. So our bottom so far has been October 13th, 2022. What did the NASDAQ do that day? It dropped just like that March bar there, and then closed higher. It closed at the high for the day on big volume. That day on October 13th, 2022, new lows exceeded new highs by 1,201. And I keep a daily thing of that. And I said, wow, that's excessive. When you get excessive numbers like that, sometimes the market can turn. And that's kind of what it did, even though it's been pretty sloppy. But this chart is a great chart because it shows you after the confirmed uptrend, when the market starts to pick up speed. Those are all ticker symbols of stocks that are breaking out day by day as the market is getting stronger. And, this is where Jim Ropel makes a killing that year. He's in a lot of those names. So that's what they're doing. So was O'Neill. So they're watching this, and that's what happens. It's the same bottom that happened every other time in history. So that was an 8-month, 49% uptrend to the end of 03. GDP was picking up. eBay, I mentioned that. And then I list the leading stocks. There were so many of them. And then for each one, I'll tell you, like O'Neill bought into this one at this point, like American Pharmaceutical. This was another winner for Ropel. Ropel was in a lot of these. And in the course, there's a ton of charts that show how he did it. So the next page, I think, is even more stocks from that. Look at how many stocks were breaking out after that. That bear market was so long, and it set up the basis for these brand new winners. These were a lot of the ones that held up the best. And, here's GenProbe, big winner. O'Neill bought and pyramided his position. He pyramided that stock 7 times before selling it in late September 03. Netflix was up 362% in 10 months. Omnivision, another Ropel one. I mean, he was in J2 Global. He was in United Online. There were so many, I don't think he could keep up with it. But he had a great year, and that's what you look for. That's what you wait for. So every uptrend has that in the course. So next is what? Oh, this is from the master course, and the master himself. This is one of O'Neill's masterpieces. How he researches a chart. I don't expect you to read all this, but in the course document, this chart is in there, and you can blow this up. Definitely need to read the notes he puts in here. But that green circle on the left is when he started coming into eBay because it was holding up best. That's the October 02 bottom. And then the one on the right is now you're into March 03. And From what I understand, he had almost his entire account in this stock and made a killing. I mean, I don't know if it was the entire, but it was a huge, big position. And then Richard, he's got the blue boxes are references back to prior ones, right?
Yeah, so the first one here, talking about the overall base here, long consolidation of 2 years or so, similar to HOL, Home Depot, and Microsoft. And then here over here, chart pattern of eBay in October of '02 is similar to Delta Airlines DAL in November of looks like '62, and CSCO in November of '90. So again, yeah, he's relating everything back to the past.
Yeah, that's Cisco CS,
Yep.
which was a
Yep.
monster winner. So he, again, this is the theme of the course. Study the past so you can profit in the future. He did it repeatedly over and over again, every single decade he was active in the market. So next is, oh, this is a great chart. This is from Amy Smith's book. Great book, How to Make Money in Stock Success Stories. This is a 4-year chart of the NASDAQ. What it does is it shows you, so off to the left, that's your market in confirmed uptrend in March of '09. This is after the '08 massive brutal bear market we had there. But what this shows you is, IBD is so accurate on picking, are you in a good market? Are you in a strong market? Or are you in corrected market? So we're not going to go through, this is in the course, we go into it in more depth, and you could see, when should you get in? When should you be out? Type of thing. And then the next chart's one of my favorites from her book. This is Jim Ropel's, one of his biggest winners ever. You can see how he takes an initial position. This is coming up off the 200-day, because that brutal, look at how, this is Baidu, which got slaughtered in the bear market of '08, which most things did. And then it comes up over the 200-day. After a brutal bear market, I think Paul Tudor Jones had that great quote, nothing good happens under the 200-day. So when this comes up, he takes an initial position, he rides it up, it's riding its moving averages all the way up. That's the 50-day line now. The other one below it is the 200-day. He rides it up, he buys a second position, the market's strong, he adds again, he reduces a position on a stock split, he sells another portion because it broke the 10-day line, and then he holds the rest, and then he sells at the top on a big break of the 10-week moving average. Now, Jim at this time is managing money in a hedge fund. He made $30 million on this stock. I mean, unbelievable. So, and you see how he did it. How did he know what to do? Well, William O'Neill was his big mentor. He learned everything from him. The same thing O'Neill did. Those are typical trades from some of these big traders. So it's a great chart. You learn a lot from that. So here's something from, now we jump a little further ahead. After the COVID bear market in April, we get an uptrend starting. IBD's right there calling it. This is from an IBD paper. This is May 15th. So now I put over here, you're 5 weeks into this uptrend. Early leaders keep running. The earliest leaders out were DocuSign and Zoom and a few others. And I put them in green up there. They're still, these are my little scrib notes. I do this every weekend, and sometimes I post them on Twitter. What's leading the market and what do they look like? Here's an uptrend, and look at the volume going up, and look at this, an arrow means it's getting supported at a key moving average. And there's another stock, the lower left is Livongo. Look at that base it created, just volume totally dries up. And then it comes up out of there, big volume coming in. Classic, just like we saw with Baidu and Apple and the one from 1885 and et cetera. So this is, people say, well, how do you catch these things? And it's great to look at them in history, in hindsight. Yeah, anybody can do that. Well, this shows you how you do it in real time. I was looking at this, and here's Livongo. So go to the next slide. I got in that thing, and I call this the perfect stock of the COVID rally. It formed a great base, as you showed on the earlier one. It broke out on volume. It was a COVID-related stock. It didn't undercut the 21-day line at all. Great stocks don't even cut. They might cut it, but they pounce right back on it. And then it gave the greatest sell signal of all. It was a merger announcement at $142 or whatever the number was. And what do great traders do? Some of the top, we have some top traders today that are mentioned in the course. Oliver Kell, who won the championship with 941% return in 2020. Matt Caruso's been up there, 300+% gains. Both of those traders made over a 400% return on the stock in what, 4 months? 4 months. They saw the breakout, they saw the confirming uptrend, they know what to look for, they took positions, it never violated a moving average or 21-day. They probably added to it and wrote it up, and then everybody sold. I was in this one. I mean, so this was a nice winner for me too, because it never gave a sell signal, and it gave the greatest sell signal the market can give you when it announces a merger, because it's not going up after that, as you can see how it chopped along after that. Take the buyout number and go find the next one. So that's a more current. And then on the last webinar, we summarize everything, we put it all together, and there's a whole bunch of topics that we go into detail on. Basic rules, buy and sell strategies, risk management. These are all talked about throughout all the webinars as we look at the cycles and the stocks and the traders. Sell advice from some of the legends, getting your mind right, excerpts from Trading in the Zone. Trading in the Zone, to me, is the best book on the psychological side. I love that book. I think everybody should master that. Final descriptions, book recommendations, references used. And then I have over here, this is probably one of my favorite passages of any trading book ever written. It's from 1910. This is Richard Wyckoff. And he says, this is talking about getting your mind right. By proper mental equipment, we do not mean the mere ability to take a loss, define the trend, or execute some other move characteristic of the professional trader. Those are all critical, of course. He says, I'm referring to the active or dormant qualities in his makeup, the power to drill himself into the right mental attitude, to stifle his emotions such as fear, anxiety, elation, and recklessness, to train his mind into obedience so that it recognizes but one master, the tape. Geez, Dan Weinstein again, right? So these qualities are as vital as natural ability, or what's called the sixth sense in trading. Some people are born musicians, others seemingly void of musical taste. They develop themselves until they can become virtuosos. It is the I will in a man which makes him mediocre or preeminent. That's getting your mind right. And Mark Benavides has a great book on that, Mindset, his latest book. There's lots of good resources to do that. But so it's taking all of that, the technical analysis, the fundamental analysis, the psychological analysis, and then incorporating, adding to your toolkit, the historical analysis that rounded them out, and they went from here to the elite status because of that. So I think, okay, here's, this is just a picture. There's a 230-page, I call it the document textbook, and it's in portrait, and all the charts are in color except some of these old ones. But this is what it looks like. And then we turn the document into the slides. I think there's 460 slides to go through.
Yeah, 460 plus.
Yeah. So this is what it looks like. It's got that cool background of the historical look of Wall Street. So, so what's next? And we're not going to read all that. It just shows you what so you want to go through this again, Richard?
Yeah. So, I mean, we touched on it a little bit, but this just gives you kind of, the outline of what we'll cover in each of the different webinars. And again, it'll be starting on July 8th, lasting through August 16th. You've got about 2 webinars per week. It's going to be intense, but it's going to be a lot of fun and a really amazing learning experience. And again, this stands for 10 uptrends, 8 downtrends, and 11 monster stocks. Anything more to mention on, the overall class as a whole, John, before we move on?
Well, it's going to be entertaining as well. So I don't want to, you're going to get sick of looking at me and listening to me the whole time, but we have guest appearances throughout several of these. I'm trying to think. We have there's one, two, three, I think four or so of these webinars. We're going to have surprise guest appearances appear and tell you from their own experiences, some great stories that correlate with all of what we're talking about here. So, and then just a couple stats on this. Today's session was like 36 slides or something like this. The course is 460 slides, and I think there were 18 charts today for if you add the market charts and then the stock charts. I think there were 18 or 19. In the document in the course, there's 200, almost 220. So today was about 6% of the course, just to give you an idea. And then, so you get a 230-page textbook, which has over 20 plus years of research. This took a lot of time to put together, but I think it's well worth it. You get two bonus eBooks, How to Make Money in Stocks, and you get Monster Stock Lessons. We're doing those because they're basically chart books. The first 100 pages of O'Neill's book is 100 charts, which there's a bunch of them in the course. And then Monster Stock Lessons, which I did last year, which you saw the Livongo chart, that's basically a chart book, but they just look great in digital format. So we have the special guest appearances, and then you want to talk about workbooks and
Yeah, sure. So in addition to the slides that you'll get, we'll be creating kind of a guided workbook to go with each of the 10 webinars that allow you to look at the slide and have a easy section to take notes right there with you. I find it's really helpful to help take better notes and get more out of the whole experience and be focused on the presentation. Then in addition, along with each webinar, we'll be doing a challenge and exercise that covers the material of that particular webinar. For instance, when we're covering Livermore, Baruch, Loeb, we'll have you mark up and analyze a chart in their style. So what would they be looking for? What price and volume characteristics would they be looking for? Where would they buy? Where would they sell? So it's a really fun way to make sure you're really getting the key lessons of the class. And it's great to look back at some historical stocks and mark them up and see how similar they are to the current world's winners. So that will be really fun. And you'll be posting that in the class. You'll be able to share with other students your work and posting it on Twitter as well. We love seeing everybody and post their work, and we really encourage that. And it should just be a really fun. I'll be doing it along with you guys. And the last point, John, you mentioned that there's a lot of rare charts included in this masterclass. If you want to elaborate on that.
Yeah, I took a master course with O'Neill back early 2000s or 2005, somewhere back in there. And it was an extensive course. It was one day, but we got a rare book from him with a lot of the charts that he used. It wasn't available to the public. So it's just a great resource to have. And they were kind enough for me to put a bunch of those in this class. So they are in here. So it's good to see those.
And what do you want the key takeaway from people who take the class to be, John? What do you want them to walk away remembering? And what do you want the big message to be?
I think it's back to the tagline of study the past so you can profit in the future. It doesn't matter how far back you go. I can't think of a better endeavor than the stock market to take history, and you can take it and use it in the current day and the future. It's timeless. All these strategies are timeless. These stock charts are timeless. They repeat themselves a lot of times. And I just think this, for especially newer traders, I just think this speeds up your learning curve. And trust me, it took years and years to put this together. There's nothing out there like this that comprises everything in one document. You can use it as a reference. I still refer back to my own book I wrote, the second book. I refer back to it all the time. What did this look like? Stan Druckenmiller, who's one of the top traders in history, I saw a video of him a couple months ago, and he kept saying, yeah, I'm looking back in history, looking how this relates to this, how it does today. He's another history buff, and he's one of the best ever. So if the best traders in history, if you want to elevate your level, I think it helps to understand historical analysis. You learn so much from the masters, from the best stocks, and the course shows you how they repeat themselves all the time and how to stay in sync with a market trend. You know, back in the day, I didn't know any of this stuff. I was the worst trader ever. I mean, it was like I didn't know where to go, what to do. I mean, and I think this puts it all together, and it strings along all the way back. I wanted to prove how far back does this go? And I went back to the 1880s. And every one of those traders learned from the ones before them. O'Neill was so influenced by Loeb and Dreyfus. Loeb was so influenced by Baruch. Baruch was influenced by Livermore. They were contemporaries. Wyckoff learned so much from Livermore. He interviewed him several times. I talk all about that in the course, how they strung this together. And then, Darvis learned a ton from Loeb. Darvis said he reread Loeb's book every 2 weeks. Now, this is in the 50s. I have Loeb's original paper hardback book up here. It's only 65 pages. So that's why he could say, I could read it in 2 weeks, every 2 weeks, just to keep himself disciplined to the rules. So, and then Ropel was influenced heavily. David Ryan influenced heavily by O'Neill. He worked for him. You have Minervini influenced by O'Neill. You have this whole string of success. Why wouldn't you want to learn? This isn't about me. This is about them. They created all this. I'm just compiling it and showing you and proving, look at this. Here's how it works. So you can't argue with history and you can't argue with success. And they all did it. So I want people to get that out of the course. And I feel so much gratitude to be able to offer it and do this. I love doing research. It's my passion. So if anybody, it turned me around. So if you're having struggles, maybe this is it. So
yeah, 100%. And just to, go over the textbook here, the 230-page textbook. This is massive. I think it's the largest PDF document I've ever opened. I think it slowed down my computer a little bit. And there's so much golden information here, and just flipping through and working to create the slides here from the textbook. It's been a learning experience for me, and I picked up a ton of stuff. And it's crazy how things are so familiar and just repeat over and over again. And I love, looking at the different market cycles, the uptrends, the downtrends, and seeing the fundamental catalyst behind those, because you get to see how things repeat. Inflation's mentioned a lot, raising rates is mentioned a lot, and a lot of it applies to the current time period. And I think that's the key point, is that this will be a reference that you're able to refer back to, next market cycle, the one after that, the uptrends, the downtrends, finding the leaders, finding the monster stocks. You'll have so many amazing charts to go back and use as precedents. It's just going to be a really amazing resource, and you get to have John, the market historian, as your guide through it all. I think on the sales page, which I've dropped in the chat here, I'll drop once again. We call you the time traveling guide. So I'm really looking forward to it. And do you want to touch on how many monster stocks are in this, and how we'll go through each of those different charts?
Well, there's over 100 individual stocks, and there's about another 100 market charts. So I counted up the other day that I think there's 219 charts, I think, in the document. And they're also in the slides, because the slides are taking the textbook so we can show it during the class. I think there were 18 today, so it gives you an idea how many more are. There's about 200 more in the document. So
yeah, perfect. With that, anything you want to mention about the masterclass before we move on to some Q&A? Any last thoughts or words of encouragement?
Well, I hope I hope people find it useful. I hope it helps people. That's the only reason I'm doing it. So it helped me. I mean, compiling all this stuff, stop making mistakes. I still make mistakes, but then I look back and go, what'd you do that for? Every time I make a mistake, I'm violating a rule that all these traders adhere to. And through the course, you'll see some of these guys, like Baruch made some big mistakes. He'd been in the market 30, 40 years, and he still made this mistake. And he'd go, why did I do that? You know, we're still all human. If this is not going to make you the perfect trader, and you're never going to have a loss. But it's everything that the best traders did compiled into one place. I don't know what else to say about that. It's the greatest, I would say it's the greatest hits of my books and a lot of the other great stock market books that are out there. Because my books are just taken from all the great books from all time. So I read a couple hundred books on the market. I donated most of those away. This is what's left. There's only like 50, and you don't even need that many. In the course at the end, I show you the top 15 market books of all time. And this course takes all the pieces from those and puts it into this one place. You know, I got permission from a lot of people to do that, so that's how it works.
Yeah, perfect. And I see a few questions in the chat and a lot of excited folks as well. So that's awesome. A message from Mike Webster. Looks like great stuff. Looking forward to it. If Mike Webster is interested in this, that should tell you something. So there you go.
Now you're making me nervous. If Mike, hey, one thing on Mike Webster, great trader, great guy. He worked with O'Neill. If you're not following him on Twitter, you're doing yourself a big disservice. He's been posting recently, since O'Neill passed away, some great charts that O'Neill marked up by hand as Mike worked with it. Mike worked with O'Neill on the model stock books, and there's no better person. I'm trying to convince Mike to write the biography of William O'Neill. I think he needs to do that. Somebody needs to do that. So, but anyway, thanks, Mike. You're the best, man.
Yeah, perfect. And just to answer some questions, the full schedule of the masterclass, when these webinars are, is on the landing page, which I'm dropping in the chat right now. It will 100% be recorded. And again, in the name of having a timeless resource, you'll have lifetime access to all these recordings. It'll all be archived conveniently for you in the class. We'll be doing these webinars about 2 a week, starting at 11 a.m. Eastern time, depending on the day. And just looking through here, it will all be recorded. What are the common questions here? You'll be able to watch it forever. It'll be in the class, and the expected length, probably around an hour and a half per webinar is kind of what we're thinking and shooting for. But we'll have a dedicated part associated with relating things to the current time period, as well as some Q&A as well, just to expand on that. So with that, John, anything else, or we can go on to Q&A, I think.
Well, I think that the course length will probably be about like this, but we do want to add for each one at the end, kind of related to the current market.
Yep.
And
exactly.
With some of the guest speakers we have on, we might, if we start on a Saturday, we might be here until the opening bell on Monday. So.
Yeah, that's a little hint about who might be showing up. So
no, anyway, it's going to be entertaining as much as we can be, and then with the guest appearances, it'll be great. So,
yep.
I hope summer school starts in 2 weeks. I hope to see people there. And again, you can watch it whenever you want. So.
Yep, perfect. All right, with that said, once again, if you'd like to sign up for the class, which I hope you do, I'm dropping the link one more time in the chat here. Really encourage you to sign up. I think it's a really tremendous value for what you get, and I'm really looking forward to seeing you all of you there. There's some great questions that came in here. And the early bird special for everybody asking is available for a very limited time, so make sure you lock in your spot quickly. And let's get into a few questions. Let's check on time. Okay, perfect. Let's see. All right, there's a good one. There's a good question here. John, for the class, do you think what kind of trading style do you think it fits well with, position traders, swing traders? How does that kind of come into play?
I think it can fit. It's not a day trading course. it's more of a, I would say, it's more of a intermediate trend position trading course, but also you can use it for swing trading. There's some in the course. I do some top current day traders. Oliver Kell's one of them. He's more of a swing type trader. Minervini says he's more of a swing type trader these days. So, and they're in the course. You could take a core position and you could swing trade around it. Eve Bobach is in the course. That's how they had great years in 2020. So you can, I think it does both of those. It's not going to see, there's not too many examples other than like pick and save with O'Neill. He held that stock for 7.5 years. So there's not a lot of that, but it's what it is what did these traders do? They mostly waited for a strong uptrend to come in, and then they came in to the leading stocks and they ride them up until the market tells them they're not a leading stock anymore, or the market's going to turn the other way. It's hard to put an exact time frame on. They're all a little different. So you're watching for base action. You know, Minervini likes to buy inside a base, the VCP pattern and all that stuff. And Chris Catcher and Gil Morales did the pocket pivot points. So there's all, you can see those in all the charts. We can point those out and say, hey, here's how you got in here, or what they did there. And then there's tons of Ropel examples of how he masters that and how he mastered selling into a climax run. So what's the time frame? As long as it takes, right? So that big uptrend, that 30-month uptrend in the middle 60s, that thing just kept running up. So just ride it up till it stops.
Yep, perfect. There's a question from Francisco. You covered this briefly, but maybe it's good to go over it again. What is your definition of a monster stock?
A monster stock is a stock that doubles within 12 to 18 months. The typical pattern, you've had in 2020, you had some that did it in 4 months. We saw Lavanga. 4 months, it went up 400%. I think David Ryan has said this. A typical great stock will double in 6 to 12, 14, 16 months, somewhere in there. It depends on what's the market doing. If you're in a strong uptrend, some of these there were a lot of stocks in 2020 from April through November, doubled. In Monster Stock Lessons, which every enrollee gets a copy of, there's 29 monster stocks that traded at least 1 million shares a day that more than doubled from April through December. 8 months, you had 29 that went up at least 100%. Some of them went up 300, 400, 500%. So if you see that, you jump on that and ride them up till they tell you to leave. They're going to break a moving average. They might get extended. You could swing trade around that, take some profits on part of it. And if it comes back to a support area and bounces off again, you know, we're kind of seeing some of that now. You know, I was on IBD the other day. We're talking about NVIDIA. There's your leader today. It's extended. So if it pulls back to like a 21-day or 50, there's big money in that. So it's extended. So if it comes back down and it bounces off that, then you know big money's coming back in. There's another entry point for you. So it's typically, you don't have to wait as long as it sounds. You can wait 6 months to really 16 months. It's somewhere in there, depending on what the markets do. That's not a long time to have a stock to get a double on, or a triple, or a quadruple, whatever.
Yeah, perfect. And I thought this is a really interesting question from Wilmer. So he's kind of wondering, we kind of all know O'Neill's style for the most part, that you're pairing the fundamentals and the technicals. But his question were any of the big winners that these legendary traders traded, did they have weak fundamentals during their climb? So I guess, did all of these traders look for both fundamentals and technicals, strong and improving earnings? What would be kind of your take on that?
This is how I look at this. This is what I think they all did. because I know what they did. Baruch studied the fundamentals extensively. Darvis wanted to know, I want a leader. Like that one, Theocal Chemical, that was a leading stock. The fundamentals were ripping because its product was in demand. To me, the fundamentals are a given. No big traders are going to come into a cheap stock or a stock that has no future profitable growth. So the market is all about money. It's about companies creating great products that lead to great sales, that lead to great profits. And the Federal Reserve is the keeper of the price of money. So you're seeing that as still an overhang to today. And that can pull down things. That the Fed, Richard, you got to reel me in here. Again, I'll be here till Monday, till the opening bell Monday. But the fundamentals are a given. All those master leaders, O'Neill would make sure if they didn't have them at the time, they were expected to have them.
Right.
The market always anticipates and looks forward 3, 6, sometimes 9 months in advance. So, and here's the other thing: when the stocks top, their fundamentals are typically glowing, and then they break. Why? Big traders are cashing in, or they see something on the horizon that doesn't support the strong fundamentals. But the fundamentals of all those great stocks, they were there. Big traders are not coming into stocks that aren't making big profits.
Yeah, perfect. And then he had a really good second question. Did most of these great traders buy the market leaders, or were the stocks simply in leading industries or sectors? So I guess asking about, were they all looking for whether the stock was in an overall theme or group that was transforming things and doing quite well?
Every single uptrend, there's been 34 major uptrends since 1900. Every single one of those, there was some catalyst that was leading that uptrend. Go all the way back in 1900, 1910, it was the railroads. We saw that first couple panel back. That was a railroad stock. Livermore Baruch did great with railroad stocks. So did Wyckoff. And in the 20s and all that, you had the auto stocks. And then so on and so forth. You had steel stocks back in the 20s as well, big leading stocks. What was transforming the country? What is happening? What is going on? Be in tune with that. That 95 uptrend I showed you that Minervini did well in. It was either June or July of 95, Netscape went public. Netscape was like the internet stock. And there was all this talk about the internet is the next big thing. This is 1995. The internet wasn't there yet. It was being built out. Those stocks, and then Cisco was supporting all that. That was the big thing. Today, the big thing everybody's talking about is AI. And this is just, if the Fed can contain, if inflation can come down and the Fed can stop the interest rate thing, and AI becomes this next big thing, there's your leader. NVIDIA is already telling you that. Supermicro is in there. There's a bunch of those. It doesn't mean, if the Fed really hits the brakes again, this whole uptrend may fall back and then you just chop along again, whatever. But every single uptrend has something going for it. In the course, I show you every uptrend and I tell you, here's a list of the leading stocks. In 82 off the August bottom to 83, you know what it was? Women's fashions were coming because women were coming into the workplace in record numbers. You had the Limited, you had Dress Barn, you had all those types of stocks. Liz Claiborne, these went up triple, quadruple percentage rates. That was a leading industry at the time. That's where the attention was going. So you have to stay in tune with what is happening out there. It's important. Every uptrend is going to be led by a lot of different new leaders, but you can have old leaders that led before can reinvent themselves. That's what NVIDIA is doing. It's now focusing on AI. NVIDIA's been a leader many times in the past, but it broke hard in 2022. but it's recovered now. It's made a brand new all-time high. Look at how many times Apple reinvented itself, and the fundamentals backed it up. So prior to the prior question, if Apple didn't invent iTunes, the iPod, the iPhone, and all that, you would never hear from them again. But they did. Every single cycle, they invented a new product. It made tons of money for them. So you had the fundamentals there, and it was a leader. Then you had social media stocks, Facebook, whatever, during that time frame. So that's a long answer to the question. You know, Richard, again, you gotta.
Yeah, I'll really.
I'll keep going.
Yeah, and just a quick thing. I think one of my favorite examples of a company reinventing itself, because you do see it a lot, is Netflix. First, obviously, you have the subscription service where you can get DVDs in the mail, all of that. Then they introduce streaming, and then they introduce original content. That's kind of the next revolution. They kind of started that, and you can see each of those new and innovative products leads to a massive run. Then they correct, sometimes really hard, 70+%, I think, at one point. But then with that next reinvention, it starts a new run. And again, you see it. I love how you mentioned Apple. You know, the iPod started something, iTunes started something, the iPhone, of course. And we'll see if the Vision Pro lives up to the hype. But yeah.
That's a great example. Netflix, and guess who Netflix kicked over to the curb when they did that? Blockbuster. Blockbuster was the way to go. Mm-hmm. And Blockbuster refused to take that route, and they went bankrupt. So there you go, reinvention.
Yep, so. Perfect. Just we'll probably have time for a few more questions here. First, I think this is interesting. It's a question on which great trader style is a good fit for investors. He says in parentheses around 3+ years holder, but ready to adapt if necessary. So, of the traders that you've studied, who kind of has a longer term time frame?
I would say probably Jim Ropel today. He's looking for the big next leader he can hold through the whole cycle. But here's the thing: you can have that as a goal. Okay, mm-hmm. Here's an uptrend, and I'm going to hold this for 2 to 3 years or whatever. But if the market disagrees with your time frame, if you don't remember Baruch's one of his strategies, be flexible. Mm-hmm. Gerald Loeb was flexible. So you can have that, but if you're going to stick to that, no matter what the market's doing, you're probably in for a rude awakening. Just flow with the market instead of having a hard opinion about, I'm just going to hold this one for 2 years. What if you buy it and it drops? Let's say, who knows? We go into another bear market and that stock drops 50%. Are you going to still hang on to it because you want a 2-year time frame? You can try that, and it might reinvent but I don't know. I don't have the stomach for that. Some people might, but
yeah. And there's kind of a follow-up question asking about more short-term traders. I think a key thing is just recognizing and learning how to identify monster stocks. You can trade them so many different ways. Mark Minervini in 2021, very short term, buying the breakout, selling into it. There's people who like to swing trade monster stocks. There's people who like to position trade them. I think just having the ability to identify them, that's the key thing we want to teach here. Learn from the past, study the past, so you can identify in the future. And John, I think you had something to add there.
Eve Bobach did that in 2020 with Tesla. She had a core position. She bought it right, ran it up, and then when it got a little messier, she would swing trade around the core position. Mm-hmm. Oliver Kell does a lot of that.
Yep.
So you can combine. Gerald Loeb did that in the 20s, 30s, 40s, 50s, and 60s. He called himself a skittish trader. The reason he became a shorter term trader like that was because the 29 bear market was so brutal. But remember, I said he made profits every year after that, coming up into bear market rallies, taking the profits and coming back down. He made a big return, $2 million on Montgomery Ward in the middle to late 20s, because that market kept rising, and he just let it go with that. But in shorter term markets, bear rallies or shorter term rallies, he would shorten up his time frame, and he did that. And he was incredibly successful. So saying I'm just a position trader or I'm a swing trader or whatever, that can be fine. But some of these, the most talented ones, I think they come. Minervini is a good one of that. So I mean, he's changed. He's just adapted to what the market's giving him, and he's extremely disciplined. So when you combine those, there, outperformer. So
there you go. Let's see. This is a pretty good one from Wout. How did these traders find their stocks? I suppose they couldn't run scans like we can today. I believe Livermore watched the 4 strongest sector groups. How about the others? Thanks.
Gerald Loeb he called them the 4 horsemen of his day. They were like the Apple, Nvidia, whatever of today. Four big strong stocks. They're all in the course. He watched those first. And if those were leading in those industries, so you look at like I said earlier, what's taking off? Right now, there's so much attention on AI. And if AI gets its tracks and it can do what it says it's going to do, there's a lot of negativity about it's going to destroy the world or whatever. But there's so many positives that it can do. And if you look back in the mid-90s, everybody was saying, the internet, what are we going to use that for? Who would ever want that? Everybody lives off of it now. You couldn't survive without it. So if AI gets some traction, there's going to be a lot of opportunities there, but that's where the focus is. So I don't even, what's the question again? Okay.
It was talking about
how do you find them?
Yeah, how to find them.
Well, during bear markets, the best stocks like Ropel and Ryan and those guys, they're looking, what are the stocks that declined the least? What are the ones that held up the best? 2022, some of those leaders in 2020, they declined 70, 80%, some more than that. I show a bunch of those in the course. And they may come back, but the overhead resistance on those is so high that I don't know. There's going to be new names come out too that don't have it. Jack Dreyfus he only bought stocks that have made all-time new highs. Nicholas Darvis, his box theory. You break out of here and you make an all-time high, I'm jumping all over you. O'Neill liked all-time highs. Ropel likes all-time highs because you don't have that overhead resistance. You have a stock up here and it declines all the way down here and then it's coming facing up. It could make it, but you got a lot of overhead, especially if it's recent, like within a year or two. There's a lot of traders that want to get out and break even or whatever they want to do with that. But I think I got off track again.
No, I think that answers it. And there's a good question from Jake. You mentioned Nvidia and both SMCI. They've had great moves, but if we are early in this uptrend, these should go up a lot more. Do these remind you of any monster stocks in the past that you've studied and taken a look at it?
Well, without naming specific names, what they're doing is exhibiting all the same characteristics of all the leading stocks from all the other uptrends. They are the leaders. They're coming out. They came out of a basing type of pattern. They broke out on big volume. They're liquid stocks. They're in this next catalyst that think this is going to be it. If they pull back and break, then they won't lead. But they're showing a lot of characteristics from all those past ones. They're showing them in the course. Every single uptrend, we talk about a stock in detail, or 1, 2, 3, 5, 6 of them, whatever it is, whatever era it is. And sorry, you can relate that to what's happening now. But to me, there's still this overhang of the Fed, too much. So we'll see. I mean, if that clears out and this thing takes off, yes, those are your 2 upfront leaders, in my opinion, right now. They're already way up. They're extended, and they're saying, I'm a leader. If this thing takes off, they can pull back. They can give you other opportunities to get in. It's still, I saw somebody the other day, a very respectable trader, goes, if this AI thinks this, we're in like the first inning. So, there could be plenty of opportunities. But inflation and rates have to cooperate, in my book.
Yeah.
There has never been, I've never ever seen in all the history I've done, all the research, I've never seen a strong uptrend with the Fed keep pounding the brakes on interest rates. When that cleared out, which happened in 82 and it happened in 95, when the Fed was done and they knew it was done, the market ripped. And there are so many high inflation and high interest rates go all the way back to the 40s. Those led to, when they started pumping the brakes on money, they led to downtrends.
Mm-hmm.
And, this one, I don't think, you cannot print free money in the trillions, which they did a couple of years back for COVID and all that, and expect no consequences down the road without any productive advantages to the free money. So this is what you're seeing. And, that's where we're at. So.
Yeah, perfect. And I see a lot of people excited for the class here in the chat here. Just a message from Chris. Signed up, excited to see more of this material. Thanks, John, Richard, and TraderLion. Awesome. We're excited to have you, and we're looking forward to seeing you in the class. And I dropped the landing page, the class page, one more time down there. We'll take, I think, one or two more questions here. There's one about the Livermore book that you mentioned earlier, John, if you remember what that was, and maybe touch on some of the books that you've read and how you've compiled that into this class.
Well, you probably can't see them, but the best ones are right behind me. The one I mentioned was Jesse Livermore. It's by Richard Smitten. It was written 20 years ago or so. He's called Jesse Livermore, the world's greatest stock trader. Mm-hmm. I personally, if you want Livermore, How to Trade in Stocks, his own book he came out with in 1940 is phenomenal. I know Minervini, that's a favorite of his. And then Reminiscences of a Stock Operator is the fictionized story of him. That's a classic. Paul Tudor Jones says whenever he hires somebody for his firm, for his money management firm, that's a requirement. You have to read that whole book before you start with it. So Livermore, those are the two best books. How to Trade in Stocks by Jesse Livermore and Reminiscences of a Stock Operator. Then Darvis, I mentioned that. How I Made $2 Million in the Market. It's my second favorite book of all time. I mean, on the market. Mm-hmm. O'Neill's How to Make Money in Stocks is not. But the Darvis book I mentioned too, you can still make it in the market in 1970. It's an easy read. His books are so easy to read. Yeah. And they're so common sense oriented. I think I've said this, somebody asked me this from IBE. Well, are you like O'Neill? O'Neill was the master researcher. I can't even come close to what he did as far as research. The trading is a whole other era. But I think I'm more attuned to Darvis's style, just for me. So you have to find your own, we're all different. Find what fits for you best. All these great traders, the same structure of strategy was the same, and it's all the same. Risk management and concentration on your portfolio, and cut your losses short, and make sure you ride an uptrend and stay out of the downtrends unless you short stocks, and et cetera, et cetera. All of them are the same, but they tweak them to their own personality. That's critical. When I wrote the first book, I was so excited O'Neill put that out. I tried to be just like him. It was a disaster for me. Not that it's great. I just don't dig that deep into the details. His system is phenomenal. And he says, I didn't create it. I'm just using history to repeat itself over and over again. If he was the best ever, why wouldn't you want to do that? So,
yep.
Back to the question. Trading in the Zone, I think, is a must. Minervini's books are great. What else? Gerald Loeb's book, The Battle for Investment Survival. That's the one that Darvis read all the time. Wyckoff's books are just phenomenal. I mean, you need the books by the guys that are in this course. They wrote their story. That's how I got the information. I mean, I took what they had and compiled it and summarized it. That's what I'm trying to do. So it's all there together. And when I saw the similarities, that's when I said, why didn't somebody just put all this in one book? You know, it's kind of like the Cliff Notes. And here it is, you know, so that's why I did it.
Yeah, and just going back to Jarvis's book, yeah, I really love how I made $2 million in the stock market. It was actually the first one I got a chance to read, and you watch his progression as he develops his style because he
Yep.
first he's just a fundamentalist, then he's following tips, he's
Yep.
fine, subscribing to research, all he makes every mistake in the book, and you watch him overcome that, develop his techno fundamentalist style, and really excel and make a fortune. So, and it's such an easy read, you can read it in an afternoon. So
It is. It
yeah.
is. And you're right. Every mistake he made, it seems like every trader made the same mistake.
Yeah.
And he made mistakes for 6 years. Minervini says this. He lost money for the first 6 years. Ropel, 6-7 years, took him to turn around. Baruch took 6 years. I don't know if there's something magical about 6 years, but a lot of them did the same thing. Hopefully, if you know what those mistakes are, which they learn from, they're all in here. So hopefully this can, increase, shorten the learning curve, I guess is what I'm trying to say.
Yeah, I hope so too. And there's a lot of nice comments in here from Alan. Looking forward to the masterclass. History doesn't repeat, but it often rhymes. From Mike
Yes.
Webster again. In my honest opinion, that price is way, way too low for all this. Just my 2 cents. That's awesome to hear. Then from Sean, I took the IPO masterclass. TraderLion puts an amazing class. I've been listening to live webinars. They're excellent. They don't do them anymore. TraderLion has picked up that baton and are running full speed with it. Yeah, we're happy to do so. Really looking forward to this one. Yeah, really looking forward to it. Any last words that you'd like to leave everybody with, John, before we call it an end today?
Well, I agree with whoever just said that. TraderLion, you guys are very impressive. You have some young, sharp minds. You're innovative, and you're a great education source. IBD and TraderLion, to me, that's, and there's the great traders in this course too, especially the current ones. They all have great services too. So we're going to talk about those when I get to them in the course. So I think it's important to not just be out there on your own, trying to figure it out on your own. There's so much, and there's a lot of bad ones, but there's a handful of great ones. And TraderLion, you guys do it. IBD does it. Great services. And I appreciate anybody, if you want to take the class, I welcome you to it. I'm so grateful to be able to do it. And, school starts in 2 weeks, so don't be tardy.
There you go. Make sure to lock in your spot today. We've had hundreds of people in here today, which is awesome. Some more nice comments from Kevin. Thanks for your time and insights. From Michael here, amazing opportunity. Can't wait for the course to begin. Me neither. So with that, I think we'll say goodbye to everybody. But thanks so much for tuning in. If you're watching on YouTube, make sure to leave a like, subscribe down below, and we'll send out this recording shortly to everybody on the email list. So thanks so much again for your questions. They were excellent, and we look forward to seeing everybody at the class. The first one is July 8th, so make sure you lock in your spot. The early bird pricing is available for only a limited time, so you don't want to hesitate here. And yeah, I think this is going to be a tremendous opportunity. 10 substantial live webinars. Those are always a lot of fun. Great questions get asked. We'll see all the excellent tangents that John manages to navigate to, and some guests too. I'm sure we'll have some. And I think it's just going to be a tremendous learning experience. And once again, here's all that you get with the class. So with that, thanks so much for coming and joining today, this Saturday. And we hope you have a great rest of your weekend. So take care.
Thank you, everybody.